All right. Hello, everyone. Hello. We just had the decision. Welcome. Let's see. Go to my 1 second. So the Federal Reserve is showing. All right. Okay, here we go. I had to watch the decision. So seems like obviously we're getting what we expected, but they're also saying that the Fed expects 50 basis points more of a rate cut this year. So they're going to lower interest rate next month and the month after that, which is obviously bullish. So, but the big kahuna starts in 30 minutes, 25 minutes when the Powell will be talking. But as you can see, and as I've been yapping ad nauseum for the last 2 months, why the markets will be going up. This is, there we go, a little better. This is why. So fundamentally, they're going to be easing interest rates, so which will stimulate the economy. If the economy gets stimulated, risk assets get bid up because of the anticipation of the growth in the economy. As the economy is the reflection of, the stock market is a reflection of the earnings, future earnings of the companies. If they earn more, their stocks will be worth more. So hence, with all that stimulus, you've gotten this reaction. Now, the reaction itself is nothing new to it. The new aspect is that they're going to be cutting downside risk to employment have risen. Okay, I'm just reading the news feeds as to what is in the statement. So, but the most important aspect is that they signaled the fact that they were going to cut it was a pretty much done deal. And the interesting aspect is now that they've added that they're going to cut another 50 basis points. Okay, that means that their stock markets should further go up. Even if you get a dip, depending where, it should probably be a gift to buy. Okay, as you can see right now, majority of assets versus US dollars are rallying, including currencies, as you can see, just flying. Right, because they have to price in the fact that the U.S. dollar interest rates on the debt in the United States will obviously keep going down. Right, the interest rates set by Federal Reserve propagate throughout the whole financial system, so the yield on the U.S. dollar denominated debt will be lower in the future versus the same old versus any currency you look at, right? So this is why you're seeing dollar just dumping, across the board. I've been telling you about this for 2 months, and for those who listened attentively, hopefully you're making a killing. All right. Let me see. One sec. Let me. If you guys have any questions, we have basically 23 minutes for Powell to come back on. All right, come back on for Powell to start the press conference. The press conference is going to be where he's going to give the future guidance, and he's going to explain his thoughts about the rate cut and the future rate cuts to come. So he's going to have to justify the 50% basis points that are coming in. I know it sounds all like mumbo jumbo bullshit, blah, 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 but you need to understand these things. If you don't understand these things and you're trading and you're just looking at stupid charts and you don't understand that there's some thought behind this, so you're just looking at sticks on the fucking screen, then you're not going to be making any fucking money, all right? You actually have to understand what is all these sticks are, right? Not just, this is whatever, BCCB, whatever the fuck retards on the internet fucking teach you. All right? Forget about all that. You don't have to forget about it, but the majority of movement comes from the big themes that occur in the markets. All right, so the big theme now is obviously finally, after 2 years or whatever it was, or 3 years of high interest rates, the Federal Reserve is now lowering them to stimulate the economy because the economy is not doing so hot, right? So maybe a little too late, who knows? So either way, like I said, the dollar is a big loser here, and whatever you're trading against the US dollar, doesn't matter, you should be doing well, okay? Except the NASDAQ, whatever, the weakest of the bunch. But silver, gold, doesn't matter. Obviously, you're seeing these spikes. But if you're not in any of the trades, do not chase now. Wait for the press conference. Because at the press conference, you're going to pretty much outline, you're going to see the outline for the next month of trading, okay? You'll know the direction. So don't rush into things just because, oh, FOMO, maybe I should buy now. Maybe you can if you want to do small and just, set it and forget it and just put your stop loss below here. But anything can happen. You can say anything, which can immediately, do this, right? And take out these stop losses here. So wait, you're gonna have some kind of movement today, and then you're gonna have a pullback. But once you know the direction after the press conference, whether it's gonna be up or down, all you have to do is just then be patient for a little bit of a profit taking from algos that just ran this price up. Wait for a turnaround, right? Our favorite turnaround candles. And then continue the journey on the same direction. All right, this is the pro move. Chasing now is a stupid move. It's not only stupid. It will cost you in the future because you're impatient. Impatience gets punished in the trading world. Okay. You cannot be emotional when you trade, and impatience is just FOMOing it in. It's the fear of missing out. It's the word is fear in itself is one of the lizard brain emotional states, right? Fight or flight, fear, greed, all of these things. And if you're gonna be a slave to those emotions in trading world, or act on those emotions instead of acting cold and logically, you're gonna just be in deep trouble. Because again, all these moves move in threes. Remember that, right? So first, let's just analyze 5-minute chart. What happened? What's the first thing they've done? The people who were long here, thinking, oh yeah, because it's priced in. What did the market makers do? They knew that the stop losses were here. So first they stopped these fucking retards out. Now they also stop out the people who were short from here thinking the information is priced in. So their stop losses just got popped. And now the market is retreating. It's the same play as enduring NFP. That's why, and you can see it on the 5-minute chart. Boom. There was no reason for this price to be here. And now it's here. 50 points. That's nothing to sneeze at. 50 points on gold is a hell of a lot of movement in fucking 2 minutes, 1 minute, okay? And the reason for that is simply to manipulate the market out. And again, it's not manipulating your $5. It's manipulating other big players, okay? Greedy players, idiots, professional idiots, but they're still idiots, all right? So that's why you see now the price popped its head above this high, and what? The algos are not taking profit on this side. So both sides got fucked. And why? Because they were impatient. You cannot compete against the algos. You can, but not in this way. Not in nanosecond, 1 minute chart time frames. Look at this shit. Look at this fucking shit. Boom, boom. I know, but I could have bought the dip. Could have bought it here. Yeah, where would you buy it? This is a fucking 50. This whole move is 50 points. It takes 2 days for that for price to move this much, and it moved in a few minutes, right? And now retreating. All right. So wait for the press conference. The price will settle somewhere here, equilibrium. Dick around, and then it's gonna either do this. Well, depending on what he says and his future guidance, you're gonna have the. You'll know whether you should be a buyer or seller in this market. All right. NASDAQ, boom. See? Impatient people. It literally popped. So what is this move doing, for example, right? Breakout traders, people think, okay, now we're gonna get a runner. Now who bought here, 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 and here because they were buyers at those levels. Where are their stop losses now? Here and here. I don't know if we're gonna get all the way here, depending on what Powell said. But going like this and then going up is a highly likely probability. Because just to fuck with people who bought here because they FOMO'd in. And how many times did you FOMO in and the market's reversed on you? It's not just you. It's literally millions and millions of professional traders who get caught in these things. And that's why you need to be patient. All right? Don't be... one sec. Let me see if... one sec. Let's see. Just want to see if the yeah, okay. All right, so so and look where it's going. How do I know that it's going to go there? How do I know that? That's because you have to... You have to think like a market maker. If you're going to start thinking, how do I fuck the most... if I was a $1 trillion trader, what would I do to grab the liquidity from the most amount of people? Professional traders. Right? And it's clear as a day. You see all these shenanigans unfold. You know, it doesn't take a genius to see why you get these volatilities. It's because people are betting on the news. They're sitting there thinking they're gonna outsmart the algos. They get the prop accounts. They get the their brokerage accounts, and they put on straddles if it's gonna go here or it's gonna go there. So the straddle doesn't work, and both sides get stepped out, and that's all because you're trying to make money via this impatient, fast money, but not fast in a good way. You're just trying to take a rip. And when you take a rip, it usually does not work out long term. Okay, you can rip once, twice, but long-term strategy, it does not. All right? So, and like I said, see, it's settling where? Straight in the motherfucking middle. Why? Well, that's because depending on the professionals, that they're not trading right now. This is thin liquidity. That's why market makers and manipulators can manipulate the market, because the big dick players are staying out. It's only morons who get caught in these fucking moves, who are even if they're professionals, they're just not very good at their jobs. All right. So yeah, let's we have to wait 13 more minutes. He's gonna start yapping. And we'll see what happens. For now, let's see. If you have any questions, post them. Obviously, it's a little slow. Well, there's nothing to do right now, honestly. You have to wait 30 minutes. You have to wait for him to start talking, because depending what he says, markets can either take out this high or this low, etc. Yeah. All right. All right. Let's take some questions. Good questions win stuff. So let's see some. If you are, but genuine questions. I don't need some bullshit. I want to see that you guys are traders and not just moochers. Okay. I'll have to. Sorry if my question will be stupid. No, you can ask questions. That's the whole point. Everybody's retarded in this business. Trust me. Everybody gets humbled by the markets. All right, so don't. But I really want to ask what you think about CRT trading strategy. It's a good or a bad one. 4-hour analytic, 5-minute entry. By CRT. What the fuck is a CRT trading? Candle range theory. I don't even know. I mean, I'm not really familiar with this. Trading involves analyzing price range of candlesticks on a higher time frame to make trading. Yeah, so that's like the basis of any trading. You look at the higher time frame. Again, everybody comes up with these scientifically sounding names for same bullshit that, you know, the same things that have been discussed at, you know, ad nauseum, you know. Before there were liquidity grabs, there was stop loss runs, okay? And before CRT, there was just look at the higher time frame and enter on a lower time frame into the direction of the higher time frame, right? So yeah, Sergio, that's how you trade. That's how I trade. That's how professionals trade. You analyze the trend of the long-term trend, and when you see pullbacks on shorter time frames and turnaround candles, or not only candles, but oh shit, we closed the window. 1 second. Oh, God damn it. Uno momento. There we go. Let me re-add the trading view. Jesus Christ. All right. So you see a pullback on a shorter time frame. Then a turnaround. See, the key is I wait for confirmation. I like to see that there is a high chance of something happening versus just blindly entering. Yeah, you don't know if it's a pullback or a turnaround, okay? You won't know until you... All right. I need to change my account 1 sec. So how do you know if it's a pullback or a turnaround? Very simple. You have to wait for confirmation, because if you're just gonna buy a dip with blindly buying a dip, you don't know if it's gonna keep going or not. So I want to see the price action stop and turn around into the direction of the major trend on a higher time frame, and that's when I enter those trades. Okay. So whether you're doing it on a 4-hour and a 5-minute or a 4-hour, I don't even need a 5-minute chart. I can look at the 1-hour chart and do the same thing, okay? Like, again, even this stupid example right here, you know, you had sell, 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 right? Railroad tracks, and once this taken out, once this candle's high is taken out, you know, if this was some kind of big level, for example, which, you know, it kind of was, we retested this, right? Whatever. So I wouldn't just be buying here, because the price can keep going and going and going. I want to see some kind of turnaround before I'm gonna hop in that train. Okay, so on a short-term time frame. So wait for the confirmation. Again, some people don't trade with confirmation; they trade strictly levels. Okay, we're retesting previous support, turn resistance, and boom, off we go. Okay, so they leave an order here and put a stop loss here, but then you should be okay getting stopped out when the price does that. And I don't want to do that. I want to wait for a turnaround. So my entry point is not going to be obviously as low as here, but my probability of my success will be, instead of 50-50, it will be 80-20. All right, so I increase my probability, and I like to trade that way. Some people don't need to do that. They kind of trade without it. I mean, they get into the trade and they okay getting stopped out, and then catch the runner. So to each their own. All right. All right. Let's see. Questions. How many guns do you own, Stan? A lot. I'm in, I'm in Florida, baby. Come on. I own a lot of guns. Let's see. We have what? 5-6 minutes. Let's do some. How many guns do you own? All right. Best way to keep the mind calm. Meditation, gym, walks, jogs. Some outside activity. You need physical activity in your life. All right. You need mental activity like meditation, breathing exercises, and you need physical activity for as well. You need to have a sharp mind to do this because it's highly stressful. It requires lots of focus. You don't need to have focus for 12 hours, but you need to have bursts of very concentrated work and catch the right opportunity at the right time in the markets. All right. What's basic strategy to use lifetime? Deep pullbacks and you take a higher time frame trend. You see a pullback happening, and then you see a turnaround on the short-term time frame happening into the direction of the longer-term trend, and you buy. That's it. That's all of trading. You don't need to complicate it more than that. In fact, all this complex bullshit is only there to sell courses. Okay, the more complex is something, even honestly, if you can't explain something simple enough, it means you don't understand it. And most traders will come up with these fucking outrageous, difficult bullshit indicators and God knows what the fuck, and just to make it seem like it's so complex that it's necessary to make money in the market. No, it's not. You can spend $100 million like some bank and do a quant fund, or you can do macro fundamental fund, and one will not guarantee you success over the other. In fact, you don't need, as long as you get the profits, it doesn't matter how you do it, right? But it's a lot easier not to, again, to each their own. If somebody wants to be a mathematical genius, quant type of guy who comes up with super complex formulas, blah, blah, blah. But most of the indicators that you see for sale or somebody teaching you on YouTube, these are not quant geniuses. All right, the quant geniuses do not post on YouTube. Okay, they're too introverted, too autistic to be in a public spotlight. Right? You see how awkward Elon Musk is in public, right? For a reason, and he learned to try to be extroverted, right? But most of people of that nature that are capable of that type of thinking are just, they're geeks by nature, and they're not looking for YouTube anything or teach anybody anything. They don't want to. They're introverted. They don't want to talk to you. They don't want to be talked to or talk to anybody, and they just sit and come up with these mental models. Whatever. You guys are not gonna get access to these people. Okay, not on YouTube. So you looking for these complex bullshit systems to trade is usually just something that doesn't work. Okay, because trading should be simple. Anything worth a damn, you can at least explain it simply enough. Obviously, it's hard. The reason trading is hard is not because of the trading systems. It's hard because you have to do shit that you feel like you shouldn't be doing. So, for example, if markets are tanking, your internal state tells you don't buy, don't buy, don't buy, don't buy. Scary, scary, scary. It's your lizard brain essentially trying to save you, because if you would walk out to take a piss in the middle of the night during caveman time, a saber-toothed fucking tiger would eat you, or a gorilla would pummel you into the ground, whatever, right? So that's why you're scared that you have these things. It's a survival mechanisms. But in trading, you need to proceed despite of them, because there is no fucking saber-tooth waiting for you to pounce on you while you're taking a piss in the middle of the night outside the cave while everybody else is back inside, right? Nobody to cover your ass. Anyway, so that's why it's hard, because you're still gonna feel like, oh shit, oh shit, oh shit. You basically trade on emotions, and if you trade on emotions, you're definitely not gonna be a winning trader. All right. All right. Let's see. What's your strategy stand? Jesus Christ, what's the single biggest mistake you smart people repeatedly make in the markets? Being analysis by paralysis, I would say. It's unable to pull the trigger. You need to what you need to do is take 100 trades and make adjustments. You keep the journal of every single entry, exit, and see how many winners, how many losers, what's the percentage, what's the risk to reward, blah blah blah, and then you make adjustments until you find a winning formula. That takes about 6 to 12 months of your of time to do it right. All right, and not only do it right, but have you execute on it. And a lot of people, they might get scared, paralysis by now. They're looking for a lot of smart people. They're perfectionists, so if they're gonna be waiting for they're the opposite of the gambler type, right? Where the gambler type wants to just click the fucking mouse button, buy, sell, buy, or rock and roll. They're thinking they're in the casino. Overly smart people, they overanalyze everything and they just don't do anything at the end, right? Always in the plan, but never to execute. There is no execution, right? So you need to have a balance. What's your strategy, Stan? Deep pullbacks from big levels. Fundamental behind gold bullish movement. Oh boy. I'm getting tired of repeating this shit. Fundamental behind the bullish move in gold is very simple. The interest rates of the United States are lowering, so the price of the US dollar is going down the drain, right? Versus every other asset. Plus, if the inflation still continues, and we have, for example, if we rate lower interest rates and the inflation ramps back up, meanwhile the economy is shit, we get a stagflation. And during those times, gold instruments like gold, they shine because they're safe haven, they're protection against inflation, and simply because since the interest rates on US dollar are dropping and the yield on gold remains the same, the price gets adjusted for it. Okay. High impact news trading is gambling. Yes, it's mostly, most professional traders don't enter these things because they know that the algos that drive this price action right now, Powell, inflation has risen recently, remains somewhat elevated. Okay, so see, you're getting a reaction now. Powell is speaking, so let me just read what he's saying. Let me see if I can do. Consumer spending slowdown, blah blah blah. So far, not very dovish. He's actually still preaching very. He's exhibiting very cautious tone, which means that the markets are not seeing they're not, the 50% basis point cut to come is still not a done deal, right? So that's why you see reaction now in the opposite. So, and it's all, again, look, I literally said the price will settle. By the time he starts speaking, I literally told you the price will settle here in the middle, and that's exactly where it is right now, in the fucking middle. And people who bought here bought this breakout or sold this breakout, both are got taken to the cleaners, rightfully so. All right, let's see. Moderation in GDP growth largely reflects consumer spending slowdown. All right. Okay, Powell says lower growth and higher inflation. So which is the opposite of what he just did. Payroll job gains have slowed significantly, reflecting lower immigration. What the fuck? Lower participation. Oh boy. I'm reading. Let me see if I can add this one sec, to the feed. One sec. I'm gonna show you what I'm reading so you can see it as well. All right, here we go. It's my Twitter feed. It's not gonna be pretty, but you know, fuck it. All right. Powell beyond next year, most inflation is being measured consistent with 2% goal. Okay, moderation in GDP growth largely reflects consumer spending slowdown. Beyond next year, most inflation. Okay. Goods inflation has picked up. Some services disinflation continues. Longer term inflation line. Okay. All right. Let me just move this to the side so we can monitor the price action. Let's see, NASDAQ. Sec. You can watch, since I'm on the live, I would usually watch their interview where he's talking, but if I'm going to be listening to what he's saying, I won't be able to talk or do anything. So that's why I'm reading the news feeds instead of anything else, instead of listening. Okay. By the way, this is he's just doing the prepared speech right now. He will be doing Q&A. Q&A is the one that's going to be more important. That's some garbage. Risks of persistent inflation from tariffs must be managed and assessed. Okay. So far, he hasn't said anything that, yeah, again, you see the equilibrium in prices, right? So everybody's kind of like holding their cards close to their chest and like, who's going to make the first move, right? It's like in those Western movies, everybody's looking in everybody's eyes, who's going to draw it first, right? So, same thing here. Base case is tariff impact on inflation short-lived. Okay, fantastic. So that means it's bullish for stocks long term. Come on. Somebody asked, what do you think is the proper way of backtest the strategy to see whether it works or not? You take 50 to 100 trades. That's how you backtest. With live account, even if it's $1 per trade, you put $100, take 100 trades, and see where you end up at, and make adjustments along the way. All right, while documenting every single trade. Overall effect of tariffs and inflation remains to be seen. Risk of persistent inflation from tariffs, blah blah blah, need to be adjusted. Shut the fuck up. Man. Business investment has looked so disinflation services continue. All right. So far, nothing. Again, he's still doing the prepared speech. He's gonna also do a Q&A afterwards. Yield is higher. Interesting. Okay. Let's see the yield. I don't know, 10-year. Oh wow, 10 years jumping. So the markets are saying, essentially here, there we go. The long-term yield that they're going to be cutting, but they're not going to be cutting for long-term. So, so short-term rates obviously dipped on the rate cut. We'll see the reaction afterwards. Stagflation. That's right. Sorry, guys. I know this is not exciting. Well, making money trading is not an exciting. This is not a casino. So, you know, sorry. All right, garbage, garbage, garbage. Nothing interesting. Increasing goods and prices accounts for most inflation increasing this year. Okay. Oh shit. He's pissing against Trump's policies on tariffs. So he's saying it's causing inflation. Not that they printed fucking $25 trillion 4 years ago, but you know, that's just nothing. But yeah, it's the tariffs only. You know, that's the problem with bureaucrats. They're all full of shit. They're just shifting blame. All right, nothing interesting so far. Let's wait for the press conference to begin. There we go. Not press conference, the Q&A. Awesome. All right. I'm watching short term. If the yields on the short term will be dropping, the dollar will be keep on dropping as well. Okay. But let's see. You're gonna get a reaction after he's done talking around 3:34. You're gonna get a reaction, which is in an hour, a proper reaction, especially tomorrow. And that's the trend you want to trade next week, tomorrow and next week. Okay, bullshit, bullshit, bullshit. Come on. And what's reserved for Pacific? Okay, now why? Okay, so see how markets are reacting. He said that there was no need to be super aggressive. So they're not. He's kind of again not being overly dovish. So dollar is now going back up. And that's why you wait. Again, people FOMO'd in here. Now it's going to turn around on them and stop them out probably here. So we'll see. Pablo, we were right to wait. Sure. Oh boy. Anyway, quadruple head fake moves rare. That's right, baby. See, professionals know what's up. They know that there's a fake out, then another fake out, then another one. So that's why smart people, smart money stays out until the dust settles, and then they just execute when it's easy, not when it's gambling and hard. Risk management cut. Oh wow. Okay. Okay, so he's really concerned about the economy and jobs. Okay. Labor market is cooling off. Tells you it's time to take that into account in policy. Yes, no shit.
The labor market, what we're seeing is unemployment is still low, still at relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was asking.
You liberal cunt.
So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
We can follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you?
Honestly, I'm not seeing anything that he's still just yapping. I'm just gonna most likely read the summary, and I'm not gonna be entering any trades today. There's no point. You're gonna see either once he's done yapping in 45 minutes, you're gonna see a price action go this way or that way, and that's the price action I'm gonna take. The markets will reveal their true direction, and if you know the direction, you know all you have to do is just go into that direction, right? At strategic points. So obviously before tomorrow opening bell, you will have plenty of opportunity to act on to get into some trading. All right. Let me read some questions. I'll just do it like this. What do you think of his property of back test? Okay, 100 trades. How do you identify when you have a true edge versus when you're just gambling? Again, you have to take 100 trades and see whether or not. Let me remove this Twitter shit. Telegram. There we go. So we have to see. How do you identify when you have true edge? You have to take 100 trades, and if you're gonna have, if it wins after 100 trades, you can make adjustments, down make adjustments, whatever. This is when you have the edge, and you have to find systems that repeat themselves, right? My entry points, I always say the same thing, are not willy-nilly. It's not like I come up with a new way of trading every day I come to the office. Okay, what am I gonna do today? I'm gonna buy or sell. No, I have a setup. If the price is executing my setup, the price sets up in a way where I trade, that's when I execute the trade. It's just repetitive. Jesus Christ. It's literally a pattern that repeats itself in the market, and you just take advantage of that pattern. It's pattern recognition. So you take the same pattern over and over and over and over and over again. That's what algorithm is. Algorithm doesn't sit there and be like, okay, am I going to be selling or buying and doing some permutations? No, it's pre-programmed to take, if this and that and that and that and that happens, I'm going to do this and that and that and that. And that's all you're doing with your brain. If this and this and this looks like this, I'm going to do that. If that and that and that looks like that, I'm going to do that. And that's it. And if something else happens, a third option, you just stay the fuck out. Okay? No widespread support for 50 bits today, but I can think of today's move as a remainder cut. Doesn't feel like you need to move quickly on rates. Okay, all right. So not super dovish. All right, let's do some other questions. Do you think the bond market is a key factor? Yes, interest rates are one of the primary drivers behind the markets. What do you think of Powell single dovish or hawkish outlook for this 21 is happening? Well, we're still figuring it out because he's still talking. What's the principle that has kept you in the game the longest? Tenacity, balls, energy. It's just, you've been in what principle? Like you become you have discipline is key to trading, and I was not a disciplined person when I was young, and it was beaten into me through pain, through market pain, by losing a lot of money and then start hating to lose even more money. You finally stop being a cunt and you start winning. People at the job market margin struggling to find jobs. Okay, yes, that's good. Watching US dollar. All right, hey Sam, what do you think what do you focus on when you feel impatient waiting for setups? I don't feel impatient anymore. I just let them set up or don't set up, because the amount of pain, it's better to be, it's cheaper to be not participating in the market. The minute you put on the trade, you have risk. All right, and and you're risking, even if everything is setting up beautifully. There's somebody can come on and say something. So the less you spend time in the market with the live trade, the better, if it's a sizable position. All right, so I'm not impatient. I know that the cycles, my setups, they repeat often enough. For me, it's a meeting by meeting situation. A more conservative outlook than expected. Forecast only one rate cut in 2026. Yeah, go fuck yourself. Meeting by meeting situation. All right, so yeah, so he's being hawkish, because he had his arm bent to do this rate cut because of all the pressure from Trump. Right? So, but he is still kind of like trying to save his face with this fucking conference. That's what he's doing. So, all right. How do you keep your mental calm when you're losing streak or win streak? I don't have to have a mental calm. It's more of a, I rely on the system. I take 100 trades, and if in that 100 trade pattern, 3 of them are losing in a row, I know it's 100. I'm not marrying any individual trade. It's just I'm in a pattern of 100. 3 or 4 losers in a row. It happens. It's just statistically, it's not an abnormality. It happens. So you just have to keep on going and keep taking until you go on a winning streak. And knowing that I backtested my system over fucking decades, I know that the system works. All right, and that's why you need to keep your journal and keep every trade documented. That way, after you have 100 of those, you can spot patterns of what not to do and what to do. And I can guarantee you, everybody who kept their journals with the before and after pictures, you'll be blatantly surprised how many patterns you will notice of shit to do, of shit not to do. What your thoughts on about the Fed monetary policies? They're always late, but now because of what happened during COVID, the risk of stagflation is high. So yes, prices for assets will keep going up, I think. So gold, let's let gold again. See, it tanked. So look at the power of threes. First it dumps, then it runs high, and then it stops out. People who are long in here with stop losses here. Do you see? That's just why you wait. Because everybody who were trying to guess the direction during this time, they got taken to the cleaners. All right, Stan kindly mentioned. Different colors. Again, it's just preference. You know, some people like black cars, some people like white cars, and anything in between. You know, I don't want the green, red because it hurts my eyes after staring at the screens for decades. I want something, especially at night, right? Because of my time zone, New York time zone. I would have to wake up at 3 o'clock in the morning, New York time, in my 20s and 30s. To trade the London Open, and in the middle of the night, I don't want a bright screen, you know, flashing my eyes and giving me a fucking, you know, blinding me. So that's why it's toned down the way it's toned down. What's your personal trigger for FOMO? Is it green candles, news highs? I don't have a FOMO. I see a FOMO as something you should avoid, not something I should be triggered into taking. In fact, I should be triggered not to take it, and that happened because I've done a lot of FOMOing it in, and it only cost me money. So now I just don't do it. It's like, how many times you're gonna put your hand on the stove before you realize it's a stupid idea to get burnt like that, right? Don't think we'll get into a place where Fed is making decisions based on political consideration. Yeah, go fuck yourself. What's your personal trigger? Okay, what does make markets immediate reaction to the FOMO statement compared with the price action during Powell's Q&A? What does it really various venue? Forget about this. Don't overcomplicate it. Your job is to see what Powell is saying, and then if he's dovish or hawkish, essentially, and then if price corroborates those statements, if the price moves in the same way as what he said, aligns with what he's saying, then most likely tomorrow we're going to have a continuation of it. It doesn't matter because they're going to replace him with another fucking retard. So it's the bankers rule the world for the last 200 years, and they keep on rolling 500 years. The bankers will keep on ruling the world. All right. What's the easy way to learn? There's no easy way. It's all about trigger time. You know, you have to literally just spend a lot of time and a lot of documenting your trades to 1 second. Data we'll get from BLS is still good enough to do our work. Yeah. Okay. I'm sorry, I'm just reading comments and Twitter and your stuff as well. Let me actually do this so you can see both. Let's do this. Oops. And let's do Twitter timeline. All right, that's better. So now you can see my feed. All right. What's the single most important principle about risk? To be humble and not to take all this shit lightly, and not to get cocky. Don't get cocky. Markets will fucking humble you real fast. All right. Just as you think you figured everything out, it will put you back on your spot, you know? So you have to be very humble and don't fuck around, all right? Don't think that you have, you're going to be the outsmarting everybody, because that type of ego thinking will get you in trouble. When closing partials, do you prefer to keep the runner or close the trade and stay patient and keep my runner because it is important? I like partials, and yeah, you can leave the runners because you don't know, you never know when it's gonna end up. So taking partial is the best way for me because it's kind of, I take a partial which satisfies my greed aspect, and the runner keeps on running so basically I already made money. I locked it in, stops at break even, and I took some profit. And then I run are either gonna make money or not make money. Doesn't matter to me at that point, because I already took a little bit to satisfy my greed part, and then I de-risk it by taking the stop loss to break even. Thank you, appreciate it, Mr. A. Or thank you. How? One piece of advice for us traders here. Do your work journaling. Journaling is paramount. I tried without journaling a lot in my first years, and trust me, you cannot rely on your memory. It will remember bad trades as good, and vice versa. Even because you can be a bad trade can still make you money, but then you remember that and you teach yourself shitty habits, and it's a lot harder to unfuck yourself than to just do it right the first time. Okay, so. Again, I think the toughest lesson was I need to systematize my trading, because the reason why I know how most of you think that you come to the 7 a.m. or whatever, whenever you turn on your computers, you're like, okay, am I going to be a buyer? I'm going to be a seller. What am I doing today? Instead of thinking, it doesn't matter what the fuck, you're doing only one thing. You're going to take the pattern that you've backtested, and it's shown you that it has statistical edge towards winning. That's it. That's all you're doing. You're not really ascertaining whether today gold is going to go up or down. I don't give a shit if it's going to go up or down at all. I don't give a fuck. I'm just going to see if it sets up to the as a short or as a long in my setups, and that's it. And if it's aligned with the long-term trend and fundamentals, that's all I'm doing. All right. How does skin mind calm? Meditation. Meditation. Breathing exercises, walks, and gym. Gym, walks, play tennis, play sports, whatever. You have to. Otherwise, you're just sitting and staring at the screens, especially in the beginning of your careers. You're gonna go nuts, and you stop seeing forest for the trees. Meaning you're so myopically zoomed in, you can't see anything in front of your nose anymore. Or you only see things in front of your nose, but not the whole big picture, rather. All right. Thank you all, guys. I'm still, he's still yapping, and I usually, doesn't matter what he says at this point. I'm just going to wait for him to finish in 30 minutes or whenever he's going to finish. And then I'm going to, let's see the calendar. What do we have? I'm gonna enter trades during London Open or US Open. Yeah, we got nothing on the news anymore. This is the big kahuna. So let's the trend will reveal itself if the gold keeps on rocking to the top side or is gonna keep on going to the downside. So ideally, honestly, a gift would be if gold retreats to somewhere around 3,500 level, which will be a retest of the previous all-time high. You can see that we've been up, right? That's a very long, prolonged movement, so a little bit of a pullback to go long, somewhere either here or here especially, would be a nice level to go long. Because, again, fundamentally, if Fed is cutting interest rates, the economy is slowing down, and if stagflation hits, the price of gold will still go up. All right. All right, boys and girls. Wait for the press conference to be over. It will be over in, like I said, 30 minutes or so. And then you're gonna start seeing the true trends. Okay. And once you start seeing the actual moves, that's when you're gonna start. Positioning yourself alongside of that flow. I want to see which flow wins. I don't know which flow will win. I don't give a shit which flow will win. I just want to be on a winning side. So I have no stake whether it's the positives or negatives, meaning shorts, bulls or bears. I'll be running with the bears or I will be running with the bulls. It doesn't matter to me. You just show me which ones are running and winning, and that's the one I want to. And that's all I have to ascertain. I don't really need to ascertain anything else. I just really, literally want to see which team is winning and join the winning team. As many of you might think that this is unsportsmanship-like, you know, and everybody will roots for the underdog. Unfortunately, rooting for the underdog means you're going to be homeless in trading, right? So you have to join the winning team. Oh, that's funny. 10-year yield is pumping. So again, markets are saying that they expected a very dovish Powell, but they're not getting him. So anyway, so the let's see the short-term yield. Okay. Watch the dollar or the yields, and you'll see again. Everybody got taken for a ride. Once the price will settle, after today's session is over, you're gonna measure the high and the low, and you're gonna start seeing if we're gonna start doing this tomorrow. Just join this side. If we're gonna start doing the same but to the opposite side, just join that side. That's it. That's all I give a fuck about. All right. Alrighty then. Nothing. Again, we're just gonna wait for the press conference to be over, and I'll see you all on Friday. On Friday, 9 a.m. we're gonna do a live. For now, you just wait, and like I said, Asian session starts, especially London, and then London session is where you're gonna start seeing proper flows, and just join the winning flow. All right, and to join a winning flow, join Funding Traders, fundingfutures.com. Check us out. Love you all. Thank you for coming, and I'll see you all on Friday. Cheers.